Alrighty, fellow kings and queens, welcome to another Sunday. My name is Taiye and I'll be a moderator on this call today. Uh, Pamela and Falami will be introducing our presenter for today. Pamela?
Happy Sunday, everyone. Hello, kings and queens. My name is Pamela. Welcome to African Business Club. Once again, our goal is to normalize financial literacy, networking, and sharing of ideas and collaboration among Africans. Before we introduce the topic today, we have a few meeting guidelines. There's a moderator who will mute everyone's mic while the presenter gives the main presentation. Once the presentation is completed, there will be a time for questions and answers and a discussion session. At this time, feel free to unmute yourself, ask questions, share ideas, and give feedback. You can also post questions in the chat section of Zoom. This session will be recorded and shared with everyone via email and our other social media outlets, including YouTube. Falami?
Yes, good afternoon, kings and queens. Happy Sunday to everybody once again, and thank you for joining us. Our financial literacy discussion topic for today is building business credit. As we all know, credit is instrumental in accelerating the wealth building process. Generating and maintaining good business credit can exponentially increase the earning potential of a business when used correctly. Good business credit is built, not given. Hence, we hope this presentation equips you with the knowledge you need to build your business credit. Today, we have one presenter on the call to lead the conversation by the name of Miss Nancy Taiye Aragbaye. Miss Aragbaye is a legacy business strategist. Thank you again, Miss Aragbaye. Please begin.
Good afternoon / good evening to all of you. I'm actually really excited for today. And just like the introduction, business credit is built. And so we're going to go through not only the importance of business credit, but we'll talk about some of the steps to get started immediately that you can do today. Before that, I want to talk about strategy. So again, my name is Nancy Aragbaye. I am a legacy business strategist. My overall objective is to ensure that businesses not only are sustainable, but that they are scalable. It's important that as Black and African businesses, that we are building something that's legacy, beyond ourselves, beyond our day-to-day work. I tell people it's a glorified side hustle when you have to wake up every day and work. The overall objective and the strategies I give is to ensure that businesses can actually be a technical business where the money is generating while you're sleeping, where you can be overseas working on something else and you know that the business operations are able to manage itself. I have a model, it's entitled, it's a framework called the Black Model, where I focus on building business development, leadership development, asset acquisition, along with building a business credit profile. I have a background in teaching. And as a teacher, I often was very disappointed in the education system. I have a 6-year-old daughter myself, highly intelligent, very innovative. And I was always confused as to why there wasn't a space that developed people, innovators and entrepreneurs, and gave them the precise skills to be successful in business. And so I walked away from education and I was able to develop strategic solutions that we have today. And so that is how I'm in front of you, getting ready to present about business strategy and business credit. So without further ado, we're going to get into the presentation. I do want to set up some quick norms. Feel free. Again, the teacher in me loves clarity. So I want to make sure that you guys walk away knowing what in the world I was talking about. So at any given moment in time, feel free to throw questions in the chat so I can clarify any misconceptions prior to the end. I don't want to wait till the end. The end is for questions that maybe I didn't cover. But if you have questions in the middle of the presentation, please drop it in the chat and I'll make sure that I keep an eye on what it is that you have questions about. So I love to be interactive with people. So again, feel free to ask those questions in the middle of the presentation. So I will share my screen and we will get started. All right, let's get to it. All right, so business strategy and business credit. Before we even get into business credit, I have to stress the importance of having strategy in business before you even try to get the extra dollars, okay? Just like Fulani said in the beginning, business credit is built. And if business credit is built, that means your business is built. And you have to build on a solid foundation, similar to a house, okay? If you try to go and get equity out of a home, or you try to sell your home, but the home is not on a solid foundation, you're not going to get the max value of that particular property. It's the same thing with business. And that's where that strategy comes in. The strategy is to ensure that we have a good health within the business, that it is sustainable long-term, and then we can apply the other skills and strategies and technique to ultimately expand the vision of the company. And so there was no way that I can come today, talk about business credit without first talking about the importance of having a solid and intentional strategy. All right, so before we get started, I wanted to give you a statistic that was actually pretty daunting to me when I started to think about business. 20% of small businesses fail within the first year, okay? And as a teacher, I'm thinking, anywhere between $100 to $300, you can start a business easily. They don't require any type of certification, any type of training. Anyone today on this call can literally go to the Secretary of State office, register their business. As long as you give them the coin, they're more than happy to accept you. However, there's not proper training strategy, no type of development given to business owners. And so I started to think about the system and what's really happening. So 20% of businesses fail within the first year. 50% fell up to after 5 years of business. And honestly, 5 years of business is really like a business is beginning to emerge. I'm in year 3 of my business, about 1.5 years full time. I still consider myself a very new business, almost even in the startup phase. And so when I start thinking about these statistics, I began to get a little worried about what was really happening in business. And most of these businesses fail because the lack of planning. They said 33% of businesses make it up to 10 years. When you're 10 years in, you're talking about what, an emerging business? So when I think about Nike, Reebok, Louis Vuitton, Chanel, these are companies Ford, these are companies that have made it through centuries. And so if 33% of American businesses are making it past 10 years, that means there's a lot of failure that's happening. And to me, that's problematic. Something needs to be done about that. And so as I started to think about, I'm like, okay, why are businesses failing? Well, most businesses fail due to poor planning. Now, I'm a firm believer of getting to it. I don't believe that ideas are meant to be slept on. I think when God gives us the foresight, the vision, the intuition, definitely start, for sure. However, sometimes we start off a passion and hustle, but we can't stay in that lane. There's just no way. You have to have a proper plan in place. Do your research, because again, it's not a hustle. And when it's a hustle, it's like you're thinking about the day-to-day. I got to make money. I got to do this. I got to do that. And being a hustler is great. It's in my blood. It's what I do, right? But I'm also building something that's long-term, longevity beyond me. And as we're thinking about our businesses, if we're truly trying to build something that's legacy and that's sustainable, there has to be a plan in place to ensure that happens. Because again, small businesses are failing simply because poor planning. Now, my favorite, they call me a strategist for a reason. A lack of strategy will literally have your business like it'll crumble. And a lack of strategy will also limit the innovation that's present. A lack of strategy is you're almost, you can go through the plan, but it's not intentional. When I think about strategy, I think about desired outcomes. What do you want to happen with your business, and going to make sure that happens? Another reason why businesses fail, and which I'm really excited to get into business credit, is limited resources. And I say limited resources, I'm talking about capital, cash money, okay? It's very hard to have an effective and efficient business. We can't really talk about scaling a business if you don't have funds. It's not gonna happen. And so we'll get into how to combat these issues. But again, anyone here today who's either currently in business or thinking about starting a business, you want to ensure that you have a proper plan, a business plan. You want to ensure that you have a proper strategy. There's a business plan and there's something called a strategic plan. They are two different things. And again, that strategic plan has to do with strategy. And I'm going to look through, okay, making sure we don't have any questions. Excuse me? I heard something. I'm sorry. Okay. Okay, great. Yeah, so lack of strategy, and then which again, a strategic plan will combat that. And then limited resources, which business credit can for sure combat that as well. And again, when you have a strategic plan, your money is better. And I'll tell you that in a moment. Again, having a strategic plan, I can guarantee you will increase not only your impact, but your income. And then you can couple that with business credit to also have additional income for your business. And again, I just wanted to throw it out there. Please feel free to ask any questions as I'm presenting. Okay, so business strategy. A lot of times I have clients and they're not really sure on what it means by strategy. I've sat down with I call them $1 million side hustles. And businesses literally making 7-figure businesses, doing very well from their perspective. And when I run into these type of companies, I tell them, because of the lack of strategy, you're leaving, if you're making $1 million, you're probably leaving 3 on the table. A strategy is very intentional and calculated, is often based on this data. And it is specifically aligned to your goals and your objectives for your company. And when I tell people to do a strategic plan, it's broken up into quarters. So, we'll get into that in just a second. It is a roadmap of exactly how you're going to get there. So we can have a business plan, and the business plan tells you who your competitors are and why your business is so great. And it can have your 1 to 5 year projections. All that's great. It's important. It's cute. But I want to know how. How in the world are you going to make those numbers that look beautiful? How do you actually make that happen? And how you do that is by having a strategic plan. And it's the roadmap that gets you to that particular point that in business that you're trying to go. And that's like the funnest part for me, is coming up with the how. I tell people manifestation, it's a cute word that's going around right now. You manifest the things that you want in life, manifest your business goals and all that sounds cute, but manifestation is, for me, is making it happen. You have to go get the income that you want. If you want to make $100,000 in your business, you have to create that pipeline to ensure that happens. You need to know how many people that you need to engage, how many people on a weekly basis do you need to sell your particular services to? Like, that's called strategy. And exactly how are you going to ensure that you have, I don't know, on a weekly basis, 100 people that you're selling your services to? The strategy is the how. The plan is like, oh, I want my goal. Let me make it $100,000 in a year. Okay, then what? So if your business does not have a precise strategy to ensure your business goals and ensure the desired outcomes that you're looking for, you want to back up, slow down, and go get the foundational skills present. Because again, if you're building a house, you want to have a solid foundation, because it will ensure that you're able to withstand some of the shaky times. In California, we have, I'm from California, we have earthquakes, and the foundation is built strategically. It's designed to withstand earthquakes and some of the natural disasters that happen there. And so when I think about business, I'm like, man, I don't want my business to crumble when there's a disaster. So I have to ensure that I plan properly to withstand those things. And again, oftentimes we run off of passion, we run off of a vision, and don't let it be from God, right? Like sometimes God shows me things and I just take off sprinting, no one can stop me. And then I'd be like, whoa, Nancy, slow down. Don't you teach strategy? So for an example, this, I'm going to give you guys an embarrassing moment because even Nancy, the business strategist, I run off of passion, but I pull myself back. So this hat that I have on my head is a visionary hat. The Lord himself showed it to me. I saw it on a t-shirt one day. I was praying and it popped up as a vision. And I was like, oh my gosh, I have to make, no, initially I was like, I don't know, God, what in the world you're showing me? And then I told my brother about it and he sketched out this logo and I was so excited. I found a graphic designer in Romania. He created the graphic design. He gave me a mock-up. He put it on a shirt. Within not even a month, I had 100 shirts, sweatshirts, I had hats, I had mugs, hats, like you name it. And I had no plan for sales. As a matter of fact, I'm so busy, they're sitting in my house in the corner. I don't even want to sell them right now because I have so much going on and I didn't have a strategy in place to ensure that this vision that the Lord showed me could actually be done. I knew the what, and I had a like general plan. I knew how many sales I wanted. I knew what profit I could make. I mean, I had the basics, but your girl had no strategy. Hence why I have sweaters in the corner of my home. So I laugh about it, but I had to pull myself back, re-strategize, put a plan in place to ensure that I have a proper and effective launch, which Q2 we will have one. So that's just an example of like what it means to run off of passion and hustle. Oh, I got it done. It was nothing, but now I'm looking at myself like, girl, what in the world? And I made mistakes too. My vendor was poor. Like there was so many things I could have avoided if I'd done the proper research, if I just calmed down on the vision that was shown to me and put a strategic plan in place, not a business plan, which again, your girl is a business strategist and I have no idea why I did not have a strategic plan for this vision that God showed me. But again, sometimes your emotion, you just run and then, you know, the mistakes happen. So I just wanted to give you guys a real life example of that. My twin brother, we literally laugh about it all the time. He thinks I'm crazy, but it's okay. Sometimes the craziness works out. All right, so enough about strategic planning. All right, so the key things you want to have in your strategy, this is like, again, when I have strategy sessions with people, it's my favorite part because you get to see the big vision that people have for themselves. And if you don't have a big vision for yourself, I encourage you to, can we get some hats? Yes, y'all can get some hats. If you don't have a vision, I encourage you, OMG, you need to have a big vision. We cannot operate on a day-to-day. You will never get to the place that you can be if you haven't thought 5, 10, 15, 20 years out. I have a vision where it's so large. This is maybe a 20-year vision. Like it's so massive, but it's there. I have it written all in my Google Drive. I have some big stuff going. I just believe I'm going to be like an Oprah. Okay. I have this big thing, philanthropist, all the things that I want to do is mapped out and it's sitting in my Google Drive. And what I've done was break it up into 5 years. So I like to do like there's the 20-year, 10, 20-year, but I also got my 5-year vision. I encourage you to figure out what in the world you and your business is going to do in 5 years. And I tell people, this is the manifestation thing again. People are always trying to manifest with their mouth. Great. Faith is important. But it also says faith without works is dead. And I need your work to make sense. And so I tell people year 1 plus year 2 plus year 3 plus year 4 has to equal year 5. So if you haven't mapped out the end to the beginning, you are behind. Let me just say that. You are operating in a place without strategy. So take your 5-year vision and break it down into the mission, right? So I love to think of myself as James Bond, Mission Impossible, that's what I call it. because it's not impossible. But the mission, what are you going to do in the next 12 months? And you take that 5-year vision and you say, okay, what is feasible? What does year 4 look like? What does year 3 look like? What does year 2 look like? And then, what is feasible in year 1? Because again, it should be from year 1 to year 5 should be like a scale, right? It has to equal this place that's here. So year 1, each year you should be adding on to that 5-year vision. So once I do that, you're not escaping the hustle with manifestation, exactly. When you do your year 1 and you break it down to 12 months, OMG, the hustle is different. This is actually the point where you figure out if you're ready to be a business owner. I kid you not. This is the point when I tell people, 12 months is not a lot of time. It goes by like that. When you're working the way you're supposed to work and you have urgency, every quarter you're tracking what in the world you're supposed to be doing, 12 months is not a lot of time. And when you realize how many things you need to get accomplished, you'll take a deep breath and then you'll decide if you're going to really push the vision or not. Try it. And then after you have your mission, right? In 12 months, I want to achieve blank. Okay, awesome sauce. What does that look like as far as goals? So when I say, what are your goals? I like things that are measurable. Some people be like, yeah, I want to make impact. What in the world does impact mean? That doesn't mean anything to me. So for instance, I consider myself a business, business literacy. I teach the skills needed to have a sustainable and scalable business. Okay, great. That's awesome. So that's great. But what are you going to do to ensure that happens? What are your goals for the year? So I've set some goals around my company that are measurable. And yes, SMART goals. I see that in the chat. You have to have SMART goals. They have to be measurable. Okay. They ought to be realistic. And I'm going to need you to track them as well. Because if you're not tracking, then you don't know how effective you are. And you might have to change your strategy, which is why you need to track, because sometimes the strategy that we had initially doesn't work. And then you change it so it can work. That is what successful people do. All right, so let's move. I'm a talker, y'all. Okay, so let's get into why we should break our goals up into quarters. So I have some goals for quarter 2 that I wanted to achieve. And when I do that, right, and I gave some examples, these are all examples. So you break your business goals into quarters, and then you ask yourself, what needs to happen so I can make sure that my goals are met, right? So it's one thing, it's like, man, I need to do that, and that, great, and I can make money from that. But there's also a series of steps and tasks that need to be achieved in order to hit that goal. So what needs to happen? Well, you might need capacity. You might need human capital. So I realized, okay, Nancy, you got to add more people to the team, because literally you're going to die if you don't. It's just too much going on. So I know in quarter 2, I'm bringing on 2 additional people to help me achieve my goals. There might be some technology purchases. Like, I don't know. Again, these are all examples, but you want to figure out each quarter, like what's probably going to have to happen. Like, I know by next year, I'm going to have a full-time director that is basically going to take all of my goals and objectives and like make it happen. Like, I don't want to have to think about things anymore. Like, because there's a whole nother area, again, vision. As the CEO, I'm always thinking about my vision. If I get caught up on the day-to-day, I will never in life achieve the big vision. So as a strategist, because I have a strategic plan and I've broken my goals into quarters, I know exactly when I need to bring on somebody else and what they will do. That's important. Like, everything is intentional. So again, capacity, I'm growing and I'm slowly scaling. So I might need to get new supplies. I might want to invest into marketing, and I might want to get some technology. Like, it could be anything. But with that being said, all that costs money, right? I tell people, there's the way this country works, they don't give money to broke people. It's just the reality. It's unfortunate because you would think like, all right, I got a business idea. Can I get some coins here? If your credit score is jacked up, you dang near can forget about it. But we done found a new way, right? These are things they don't teach in school. But there are ways to make it. There are ways to get money if you do it properly and if you're willing to build the legacy out. Oftentimes people want the quick fix. I tell people straight up, I don't do overnight magic. I am not here to get you rich, but I can get you a legacy and I can get you wealth if you put in the time that it takes to do it. Again, and once you map out 12 months, that's not a lot of time. You can get business credit within 4 to 12 months. Even if you're a new business and you have a 500 credit score, it can happen. But are you willing to put in the work? And are you willing to have the endurance, right, needed to get there? People too often are in hustle mode and not in strategy and legacy mode, and they want the quick fixes. We've been in a pandemic for over a year. If everyone on this call, if they would have started their business credit last year, they would have business credit today and be able to do multiple things in life. Thank you for putting the SMART goals, the abbreviation in there. Specific, yes, measurable, attainable, relevant, and time-based. All right, so let's talk about business credit, because again, I went through this strategy and I didn't want to focus too much on strategy because this is about business credit. But if we actually break down our goals and we figure out what we need, then we can determine how much money do we need to ensure that happens. And when we determine how much money we need, we can determine if we need business credit. Okay. Business credit, I advise anyone can, like any business can get it. Literally, I'm telling you the truth. There's a strategy to do it, but it's important to know like, what do you need? Because there's levels to business credit and we're going to get into that. When you have your vision and your mission and you know where you're headed, you know what you need for business credit. You know how much you're going to eventually want. So you know exactly what you need to do in your timeline. So have the strategy first before you're like, oh, let me get that business credit. It's great. You can live your life from it. You can get cars. You can get, you can, you can live your life with your business. Okay. Let's just say that. All right. So business credit versus a business credit profile. OMG. So I have so many people hit me up and they're like, yeah, the bank offered me business credit. I said, yo, that's not a business credit profile. The first thing I asked, is it reporting? And they're like, I don't know. Okay, it's probably not. And the only people that know about your line of credit is you and your bank. You do not have a business credit profile. So business credit, there's some people, if you got good credit right now, you can walk into a bank and they will give you a business line of credit. And it's likely going to be reporting also to your social security number. Some banks, I think like Navy Federal, they will look at your personal credit, but they don't report it on your personal credit. But most banks, like if you walk in and they say, hey, they're going to look at you. They're going to say, oh, you have good credit. Do you want a business loan or a business credit card? And you're like, yeah, right? Because like who doesn't want extra money, especially when it's for their business? And before you know it, you have something reporting to your personal credit. Now, sometimes that's okay, depending on the urgency and the time frame, which I said, go back to your mission and your vision and your goals. So sometimes leveraging your personal credit to build business credit is okay. So I don't want to say that's necessarily a bad thing. So I tell people I give strategy based off of your goals. And it's different for every person. However, there's a difference between business credit and a business credit profile. A business credit profile is built with the business credit bureaus. So just like TransUnion, Equifax, and Experian, we got that love-hate relationship with them. And we want to make sure that everything there is accurate in reporting and that our credit score is on point so we can do things in life so we can live the way we want to live. It's the same thing for business. So there are credit bureaus, and I actually didn't put it in this presentation, but I can say it now. There are business credit bureaus. There is a business Equifax. There is Duns and Bradstreet, and there's a business Experian, and they literally report to the bureaus just like they do your personal credit. So if you don't have and then when I was 18, it's like when they're like, oh, I meet adults now and they're like, I don't have credit. And so if you don't have credit, then there's no way for a business or a vendor or company to see if you're trustworthy. It's the same thing with business. Business Equifax, Dun & Bradstreet, and Business Experian, they're looking to see, do you exist in the Business Credit Bureau? And if you don't have a profile for them to judge you on, then you cannot reap the benefits of good business credit. Just like in real life with our own personal credit, if you don't have a profile, then you can't be judged because there's nothing for us to go based off of. Okay. So we want to make sure that, again, you can go to a bank right now with a good personal credit and get business credit cards or a business loan, but that does not mean that you have a business credit profile. Your business credit profile, again, is built with those three bureaus that I mentioned: Business Equifax, Business Experian, and Dun & Bradstreet. Okay, so the benefits. Why does anyone on here want business credit? So let me tell you just some real life examples of like why you want to do these, why you want to build business credit. And again, you can be a brand new business. You can have registered last week and you can start building business credit profile today. Think about it. When you're 18, the moment you strike 18, actually, you can start building your kids' business. I'm sorry, your kids' personal credit now. Like they can be 5, and you can give them a line of credit, authorized user, and start building that history. But it's the same thing. Like when they're 18, they get to use it. It's the same thing with business credit. The moment that your business is incorporated and you have the EIN number and it's registered and all that, the business is 18 years old, right? So you can start building the business credit. So you can be brand new. Please start. You should. So first of all, you can separate your business versus your personal expenses, which you really should do. You should. Oh, great question. We're going to get into that. Does business credit have a Fico score? They have something like a Fico score, and it's called a Paydex score. And I'll talk about how to build your Paydex score because it's out of 100. It's 100 points instead of 800 points. And when you have around a 90 and above, you're like, ooh, you're attractive. They want you. They give you what you want when you got a 90 or above. So the objective, just like with personal credit, you want to have like that 700-800, right? Between 700 to 800, you want to have a 90, between 90 and 100 for for business credit. So that was a really great question. All right. So you want to separate your business versus your personal. Oftentimes, again, I see people too often, you're spending your own money. And sometimes in the beginning, you have to do this, but you want to separate your business expenses from your personal expenses. Also, they give lower APRs for business loans. The system, the business credit system was actually designed before the personal credit system. And the reason why they give lower APRs is because businesses are the backbone of this country. And this is what they do. Let me just give you I'm a little off, but let me just tell you what these banks are doing. Banks take money from regular people and they give you, put your money in the bank, and they give you 0.3% interest, 0.03% interest on the money that you're keeping in the bank, right? And they take all your money and then they loan it to business owners at what? Let's say 4% interest rate. So they're making money off the money that you done gave to them, giving you 0.3%, getting the 4% back, right? Well, let's even say 1%. Let's just say they give you 1%, which let me know what bank will do that. But let's just say they give you 1%. They've made 3% off the money you done kept in the bank anyways. And then, because they know that these business owners, if you have a business, you're likely making money from your business. So they will lend you the money, especially when your business credit profile shows that you pay back your bills on time. They're going to lend you the money at a lower interest rate because they're going to make money off of you. So they're not even spending their own money. They're using regular people who don't have business sense and business knowledge and put their money into a bank, and they lend it to business owners. That's what they're doing. So if you take out a like $25,000 loan personal, $25,000 loan business, guaranteed the business APR is lower. And whatever example that I gave to you is why businesses generate income. They hold communities and economies together. All right, why else? You save money and you end up increasing your net worth. So I don't want to get too much into that. That's a whole separate conversation about the benefits of like having a business and business credit, but you get the gist, I'm hoping. Okay, let's move on. All right, so now everyone's like, how do I build business credit? Okay, let me tell you how to build business credit. Okay, so, and again, this is applicable to primarily the Western world. It's not, and some of these other countries, they're still working on it. Let's just put it like that. But the Western world, this credit is applicable. All right, so prerequisites. Okay, so if you have a side hustle that's not registered, you do not qualify, okay? And if you're registered as a sole proprietor, you don't qualify because you're building a sole proprietorship is simply yourself. So what I need for everyone on here to do, if you have a business or are interested in business, you want to make sure that it's either an LLC, a corporation, a nonprofit, like it has to be an entity outside of you. So if you're a sole proprietorship, I'm gonna need for you to turn it into an LLC, a corporation, or a nonprofit, something. It can't be a sole proprietorship. So I need it registered. I need you to get an EIN number. So let's talk about this EIN number, okay? Oh, I don't think I put DUNS number on here, OMG. But anyways, the EIN number, think of your EIN number for your business as your social security number. So when we file our taxes, they ask us for our social security number. That's what it is. The EIN is simply the social security number for your business. So you need that. You also want to have a business account. There are a lot of businesses that I work with and they don't have a business account. I think that's just really awkward. You want to separate the two, okay? Get your business expenses separated from your personal expenses. It's going to benefit you in the long run. You also want to know like how much is your personal business generating and spending monthly, like just get a business bank account. And if you want to build business credit, you need it. So you want to make sure you have that. I'm sorry, a DUNS number is supposed to be on this slide as well. I think my brain was moving too fast, but DUNS number, which is simply a Dun and Bradstreet number. And I can put that in the chat. A DUNS number is your social security number, but for the Business Credit Bureau. So with our personal credit, we have that one number, which is our social, SSN. And it is applicable for the IRS to track all of our behavior, right? And then also for the business credit profile, so they can see how responsible we are with money. I mean, not the business credit, the credit bureaus. With business, you have two numbers because DUNS is like private. I'm sorry, yeah, so the business world, it's kind of like private. So they have a DUNS number. So your EIN number is needed when you file your taxes and things like that, like you're officially registered, like the government knows about you. Your DUNS number is used to build your business credit profile. There is no way in the world that you can build a business credit profile without a DUNS number. And what Duns and Bradstreet is starting to do now, a lot of businesses, they generate them automatically. Sometimes. So there's businesses that I've supported and then they somehow done. I think Duns and Bradstreet's like working with the government to just automatically generate DUNS numbers. But sometimes you have to register. If it's not there, you can check. If it's not there, then you request a DUNS number and they're basically giving you a quote unquote SSN for your business. Because again, how are they going to keep track of you if you don't have a number that says this is this business entity and they're going to report your business spending habits? That's what the business does. Are there any questions about that? Please feel free to throw in the chat. So EIN, government, DUNS number, the business credit bureaus. So you need both before you can do anything as far as building business credit. So there's a process, and I have, if you either email me or follow me on social media, and I'll drop the link in there, You can download, I have a do's and don'ts guide. I didn't want to put all that on here because I already have a resource that will go through all of that. That's free. But there are some things that you want to do that to build your business credit. Like you have to have an address, for instance, is an example, that is not attached to your house. So a lot of people, home-based business, let me just use my home address. Okay, so when you go apply for an unsecured loan, you're going to get denied because you don't look serious. So you, no PO box, no sir. So you need to look official. A part of getting a loan from a bank is looking the part. And we know that, right? Looking the part is like 80%. You look good, people trust you. You look crazy, you're not trusted. So your business, like having a website, having a phone number for your business that's reported to 411, having a virtual address. So I'm based in Atlanta. I work from my house. Really, I work from anywhere. But my business address, I have a virtual office in Atlanta. And I pay monthly. I pay probably like $60 a month to look the part. And when I do want to have a meeting there, which it's COVID, so all my meetings have been virtual, but I can go there and pay for a meeting room. But they collect my mail, whatever I need, it goes to the virtual address. So it looks like I'm in one of those high rises if you in the city in Buckhead, and all of the like I got my own little office in this building. So they done found a way to just monetize more. But anyways, you can't have a PO box. You have to have basically a paid office, okay, if you want to qualify for business credit. So that's a good question. No home address, no PO box. You need to get a virtual address, and virtual address, that's part of your operating budget. All right. So yeah, website, phone number, like you just want to look official. Again, the guide has that information on there. And I'm more than happy to not send it, but I can give you the link for you to download it straight for anyone that's interested in building business credit. All right, so once you have like the basics done, your EIN number, you're registered, you have your DUNS number, you have your business bank account, your address is proper, you got your website, and your phone number is registered with 411. Now it's like, okay, I'm ready. Let's get it. So it's a process, you guys. It's a process, but you want to go through this process. This is like the process from I have terrible credit score and my business is brand new and I've never bought anything at all. I haven't reported anything to the credit bureaus. You want to go through the whole entire process. Now, for those who have good credit, depending if you want to leverage your personal credit or not, you can co-sign for an unsecured loan for your business. You can. And you are the guarantor on the loan. So it just depends on the outcome. But this is the process. If you're like, hey, I don't want nothing attached to my name. I want my business to have its own entity. And I tell people, the thing about a business, it's like a whole nother human. Think of it like a husband or a wife with good credit. Like that's how I look at business. You can buy cars, you can get property, you can assets, like your business name, you run your life on your business. And people do it all the time. So the first thing you want to start is like with vendor accounts. A vendor account is simply an account. Okay, so if you have like Uline, you have like Quill, there's Staples, there's all of these vendor accounts where businesses, they usually buy things with a purchase order. They'll buy things in bulk and they'll pay at the end of the month what they've purchased. That is called a vendor account. So there's different vendors. There's hundreds of vendors. And again, in our program, we walk people through this step and offer consulting. But like this stuff, like I said, this stuff, I'm giving you guys the basics, but it's complex and there's a strategy to do it. Like there's tier 1 vendors, there's tier 2 vendors, and there's tier 3 vendors. And at different points in time, you get these different vendors. But either way, you need a vendor account. If I tried to walk through business credit, we'll be here for 2 weeks straight talking about business credit and how to build it properly. So I'm just giving y'all the basics. So you want to have a vendor account. Anyone here on this call, if you went to Uline today and said, hey, I want a vendor account. If you wanted a vendor account, Uline accepts everyone. You can have $0 in your business account and a 200 credit score, if that was even a thing, and you would qualify. And what you want to do, this is how you start establishing your history, right? Just like with personal credit. In order for you to have history, you have to take out what? Debt. So with business, it's the same thing. So these vendor accounts, when I first started, Uline was my go-to. So I got Uline, I'm like, bam, bam, bam. And hey, I bought things. Let me show you. I just bought an order now. Let me show you. So it's on my table here. My daughter was like, Mommy, why did you buy that? I was like, because. So I have these here. It didn't come from Uline. It came from somewhere else though, but it's sponges. So I know every couple months or whatever, I change my sponges in my sink because I don't like when my sponges look disgusting. So I just bought some in bulk because I know like this is going to last me for a while. And instead of going to Walmart and spending $3 on sponges every couple months, I just bought it with my business credit as a business expense. So I took the debt out and I paid it back. And now it reported to, and they don't report, the thing is they don't report the item, they report the history, right? So you can buy hand sanitizer, Clorox wipes. I bought, when I was selling my sweatshirts and stuff, I bought like tissue paper and the liners. I buy things, I bought a yoga mat. My yoga mat is pretty soft and cushion, it has a lot of cushion as well. Like you can buy things that you buy in your regular life. I bought a pack of, I got these really cute pens. I'm a pen junkie and expo markers and stuff. Like I have an addiction, it's pretty sick. So I bought a brand new pack of pens. I just got this in. And every time I go to Target, I kid you not, I go in the pen aisle and I like buy pens. And I was like, yo, Nancy, you got to stop the sick addictions. Just start buying it with your business credit profile. So I make these purchases with the vendor accounts and I pay them back on time. Key, pay it back on time, okay? And you want to pay it back within like 10 to 15 days. They're called net 30 accounts, these vendor accounts. Sometimes they have like net 15 and net 7, which just means the amount of days you have to pay it back. But it looks good when you do like a net 30 and you pay it back in like 10 days. They're like, ooh, they responsible over there, right? Like that's how it looks on the credit profile. So you want to get these net 30 accounts and you buy things, trash bags, literally trash bags, dish soap, a water dispenser. Like it's just crazy what's on there. I didn't create the system. Okay, the system's sick, but I use it. Okay, I'm gonna use the system just like they be using us. No, but seriously, it's crazy. So you're making purchases with your business, and it's reporting to your business credit profile. Again, they do not report the item; they report the history and the payment history. Did you pay on time and when? And you want to look like a boss in your business, so you want to pay it back on time before the 30 days. That's going to increase your Paydex score, which is equivalent to a Fico score. Okay, so after you have about 10 vendor accounts, you can now apply for a fleet card. What in the world is a fleet card, Nancy? Well, everyone on here should have a fleet card. Let me tell you why, because we use it every day of our life. If you drive, you want a fleet card because it's simply a gas card. So a gas card, I'm putting my Instagram name now. A gas card is a fleet card. So like if you have Mobile or Valero, Marathon gas station, QT, these are cards that you can get. And when you get the card, so after you, and again, it's a process, right? It's a hierarchy. So now, boom, vendor accounts paid on time, Paydex score looks great. Next step, fleet cards, bam. Now you can get a gas card and they can approve you maybe $1,000, $500, whatever it is, because your butt is buying gas all the time anyways. You spend gas money and don't have to commute. Now people probably use less gas because everyone's working from home, but either way, you still drive. You're going to spend money on gas. Put it on your business fleet card. You put it on your business fleet card. It reports to the business credit bureaus. You look like a phenomenal superstar. Your business is responsible, and your Paydex score is looking really nice and healthy. From there, now on Instagram, this is what I be telling people. Instagram will have you thinking like business credit is so simple. Bam, I just got approved for a $10,000 revolving account, which I'm like, that is great. It is, but it's not an asset. I cannot go buy assets with a Dell card. I cannot go buy assets with an Apple card of $20,000. The goal is to be able to walk in that bank confidently and get an unsecured loan, which is that last step. And that is hard. Okay. So Instagram will have you just thinking like it works like this, and it doesn't. So I'm just here to tell the truth, but whatever. Your revolving cards are like the Dell cards, the Apple cards. Oh, they got Walmart cards, Target, OMG. Like, it's the places that you really be at. So it's great. It is. But at the end of the day, I cannot go buy a house with a Walmart card. I cannot go buy an asset with an Apple card. Now, I can buy a laptop, and when I don't have to spend my cash right now, but eventually it's still a liability. And that's what I want people to really think about. Like, are you buying an asset or are you buying a liability? So yeah. So next step is a revolving cash card. And we're actually getting ready to be done, and now I'll give you guys an opportunity to ask your questions. The next step is a revolving cash card. So after you've made, again, you want to have multiple accounts reporting to your business. So the next step is your revolving cards, and you can have a couple of those, and you want to spend them monthly. You do, or as much as you can, and then you can have those report as well. The revolving cash card is like a business credit card, basically like a Chase, different companies that offer actual credit cards, but it's under your business name. That's like, okay, now you're talking, but it's still not an unsecured loan. It's still not $50, $75, $100,000 where you can go just spend freely. That is the last step, and it's really, really hard to obtain that. There's different strategies to do that. This call now, or this session, doesn't allow for me to get into like how to really get an unsecured loan. But you first have to get an unsecured loan. You have to walk through these steps that I just given to you. So the unsecured loans is when you walk into a bank and you can say, hey, I want an unsecured $100,000, and you walk away with it with a low APR. But you have to have built the steps first in order to do that. If you want a vehicle, when you get to the revolving account, you can go to a dealership and they can give you like if you put the car in your business name, you can do it without a guarantor, without using your social security number. But again, a car could be in liability if you're not using it to make money. So again, I always think about what's the ultimate goal. You want unsecured loans. Now, again, if you need technology, you can do that with the revolving account. If you can make some payments with your cash cards, you can. But if you have the unsecured loan, that's when you can pay for human capital. You can pay for assets, property, and things like that that will allow you to generate more income. So that's the process for business credit. I believe, if I'm not mistaken, that brings it to an end. Here's my information, but I do want to give people an opportunity to ask me questions. I would imagine that this is not through the chat. So if the moderator, if you can just let me know how this process works, I'm more than happy to answer people's questions.
Awesome. Thank you, Ms. Nancy, for the presentation. We have now come to the question and answer session. Please raise your hand via the Zoom app or write your question in the chat window of the Zoom app, and you'll be called upon accordingly. So while you guys do that, I do have a few questions of my own. Right? being a moderator, I get to get the first dip, right? So you had mentioned something about Paydex, right? And you also mentioned the DUNS number, I guess is what you called it. So what's the difference between the two, right? Are they kind of like similar? Are they different? Do they do different things? Can you expand on that a little bit?
Yeah, thank you for that question. So if I were to have a T chart right now, my Paydex score and my Fico score would be equivalent. So the Paydex score is the score that indicates how responsible your business is in regards to like paying back debt, right? So our Fico, the higher it is, the more responsible we are, the less risk. Same thing with the Paydex score. So your Paydex score is out of 100 points, and anywhere between 90 and 100 makes your business look very credible and less risky. Your DUNS number, that would be equivalent to like a social, because we only have one number when we're talking about our building personal credit, but it's our social for the credit bureaus. Your DUNS number is your social for the business bureaus, but it's not, there's an EIN number and there's the DUNS number, and they have two functions. DUNS is strictly for the business credit bureau, which are Dun & Bradstreet, Business Equifax, and Business Experian. If you Google those right now, they would come up. It's an actual credit bureau, and they have your DUNS number. They'll have like your profile to see if you're worthy.
So the DUNS number kind of goes up and down, just like a personal credit score?
No, the Paydex goes up and down. Your DUNS number is like a social security number. Gotcha. Your social security number is just your number to track who you are and your how responsible you are.
Okay, makes sense. So the other question, I guess it's somewhat of a follow-up. The vendor account number, the vendor accounts that you had mentioned earlier, it seemed like you'll be buying things in credit since you won't be paying till the end of the month, right?
Yes.
So how do you, what are the requirements, I guess, for someone to trust you enough to say, yeah, you can buy anything and pay me at the end of the month? Are there requirements that you have to meet to get vendors account?
For some vendors. So there's tier 1, tier 2, and tier 3 vendors. For the most part, tier 1 vendors, they just good faith, right? You have a business account, you're registered, you have an EIN number, you got to have some type of like, you're serious to some extent, and you have a DUNS number. Because either way, they're saying, hey, it's almost like when you think about you turn 18, somebody ends up trusting you. You might get like an interest rate that's higher or whatever. It's similar. So they'll say, hey, like Uline, when I first started, they gave me, I think, $1,200 line of credit. You only need about $75 to report anyways, monthly, with each vendor. So I just bought things. And so I pay them back, but they trusted me. So it's just trust. Yeah. Now, tier 2 and tier 3, it depends on the length of your business, how long you've been in business, sometimes how much you're making. So as you start getting to the different tiers, because you don't have a profile, they might request different things. So there's a way to accelerate it, but it's a whole nother conversation. But basically, they either use your profile to determine your credit worthiness, if you're tier 2 and tier 3, but if you're tier 1, you're pretty much automatically approved.
Makes sense. So there's a question in the chat window from Frank. He's asking, do you contact the bank for a credit profile, or how does that work?
No. So I'm going to go back to the phrase from the beginning. Business credit is built. So you actually have to build your profile. So the people that build your profile are the business credit, or I guess that monitor your credit profile are the business credit bureaus. This is why having a DUNS number is essential, because it's the number that tracks your business. One DUNS number goes to one business owner, and that's it. So they know once they click that number, they can pull up your history. So you don't contact the bank until you want funding, and you can give them your DUNS number. And when they run it, they can look at your credit history and how risky you are. But you don't go to them to build it. You build it on your own through vendor accounts, through revolving accounts, through getting credit cards and so forth, and then making sure it reports. Because sometimes you can get somebody might give you an account or give you a loan. I've had people, I have business credit. No, you don't. You have a credit card or you have a loan with your bank, and the only person that knows about you is you and the bank. So
Yeah.
you want to ensure that it's reporting to the 3 credit bureaus that I named earlier.
Yeah, so the funny you mentioned that this for people that don't have businesses, I guess another way to relate this to what they may be familiar with would be separating a credit score to a credit report. A credit report would have all the history of your previous loans, how well you've paid, if you were late on them. While they use a credit report to generate a score at the end of the day, those are still two separate things, right?
Yeah.
Your credit report will have all the history. So I'm guessing that business profile is kind of similar to that, right?
Yes, yes, yes. And there's actually a way, I'm so glad you brought that up. They call it a NAV report, NAV. And that report will show you actually like your history and your profile and like what's happening.
Yeah.
Similar to the credit report.
The credit report. Yeah. Awesome. Awesome. So guys, if you have any questions, feel free to ask them in the chat. I'll keep asking away. You had mentioned something before as well, not using your personal or your home base, your primary residence as your business, right? And using virtual addresses. Can you expand on that? I know that, you said you rent a little corner in a high rise, and some people may not know, maybe how to navigate that space, right? Can you touch upon that a little bit?
Yeah. So there are a lot of companies that give virtual addresses. So I didn't make the rules, right? The rule is like when you apply, they do the banks do a whole entire like history check on they check to see how thorough your business is. They're gonna look to see your credibility. They're gonna check to see if you're on Google. They're gonna check, they'll even look at social media. They'll check everything that they can because again, they're trying to do the most research to see how credible your business is. They check to see the address of your business. Why? It's part of their what is that called? I can't think of the word now, but it's a part of their process to ensure that you're not a risk. And so they'll look at the address. So a part of their requirement is not having a legitimate address. It's the word's not due diligence, it's something else. But whatever. It's they create these the parameters of giving to qualify somebody for a loan. And so a part of that is the address. And so you don't want to have it in your business name because that can reject you from getting a business loan. Again, unless you want to co-sign for it, that's different. But if you want to just get it on your own name, you want to have an address that is either an actual brick and mortar, or you have an office space somewhere, or a virtual address. There's so many companies. If you just Google virtual address, there's all sorts of companies. Anywhere you see those buildings that have multiple offices within them, likely they're offering virtual spaces. It just means they're collecting your mail and you pay them every month. That's all they're doing. So yeah, that's what I mean by a virtual address.
And what about phone numbers, right? Obviously, I'm assuming that you shouldn't be using your personal phone number as well as your primary business phone number, right? So do you just have another line? Does that get tied into that virtual space that you mentioned, or is that somewhat separate from it?
Great question. Depends on the space that you're using. So some of these virtual spaces, you can add a phone number on there as well. I use basically a virtual number. But the biggest thing is, does the number, are you able to report it to National 411? I initially had a Google number. I mean, I use Google, my whole back end, everything is on Google, but unfortunately, Google numbers do not.
You're talking about Google Voice, right?
Google Voice, yeah.
Yes.
Google Voice. They do not report to 411. They just can't. They can't for some reason. It's not compatible. Then I tried GoDaddy numbers. Okay, GoDaddy numbers are not compatible with 411. So I use something called Ring Central. And again, it's not the only company. There's these things are all Googleable. But the question is whatever number it is, could be a landline. I don't care. Is it compatible with national 411? Because again, if someone Googles or tries to find your business, and I don't know why they're still operating like they're in the 1990s, but they are. But we used to search for businesses or phone numbers through 411. 411 has all the info. So you're technically considered official when 411 has your information.
That makes sense. That makes sense. Yeah, and I know that there's so much information that goes into building. I mean, an hour is not enough to, explain all the ins and outs as far as building a credit worthiness and a good business credit. But if you were to kind of narrow things down to maybe, 3 or 4 points that people should pay attention, I always tell people that even with your personal credit, it's a way to see how responsible you are, right? At the end of the day, you borrow money, you have to pay back, right? You commit to something, even if it's a car loan, a mortgage, or whatever it is, your student loan, you sign your name on the dotted line, right? How responsible are you to your words, right? At the end of the day, people want to make sure that you're a trustworthy person, right? When it comes down to business, right? How does that, what are some of the key things that you think people should always keep in mind to make sure that, while it's not an overnight thing. You had mentioned that it's not an overnight magic, right? This is going to take time. But what are some of the key steps that you think people should always keep at the back of their mind to say, hey, I'm on the straight and narrow road in building my business credit?
So I tell people your Paydex score will get you paid. That's my phrase.
Wow.
And when you say that to yourself, it's like, okay, what are the things that keep my Paydex score high? It's paying back your bills on time. So it's going to take money to make money. So when you have that debt, right, you take it out and then you pay it back on time, that builds your business pay score, which is a Paydex score, that will allow you to get that unsecured capital where you can start buying assets. I tell people the end goal is not to be cute and like have a car in your business name and like, credit cards and things like that. That's all fine because we spend anyways. But my ultimate goal for business owners is that sustainability model and scalability model. So I tell people your business should have assets, homes, property, digital assets, whatever it is, land, crypto, like your business can own these things and you want your business to be generating and making money. It's the same principle, that passive income. So the same thing for business, you want to have that revenue constantly generating in your business. And if you have a good Paydex score, you'll be able to get yourself paid through having that unsecured capital.
Awesome. Thank you. Thank you so much, Ms. Nancy. We've come to the end. Before I pass it down to Dorian to close us out, I will put a poll on your screen. It's about 4 to 5 questions for everybody to just kind of give their thoughts on it. And with that said, Dorian, can you take it over, please?
Hey, thanks, AJ. Thanks, Nancy. That was a great. I'm sitting down here just taking notes and still trying to get to that level. And I think, for me personally, this is a whole different conversation from what I'm used to talking about or listening to. So I think that's why we probably don't have a lot of questions, because it's just a different kind of level. And I'm very honored to have you here to kind of put us on a level of financial literacy that some of us are not even thinking about. So this kind of conversation is something that I will go back to and listen to, maybe Google some words and some terms that you've mentioned. So thank you so much. Before we leave, we usually ask our speakers to give us you dropped a lot of common sense tips just now, but I like for the speakers to kind of end with a common sense finance tip. So if you have one, I would love to hear what you have for us.
Yeah, I guess let me probably 2, because again, your Paydex score will get you paid. And I say that from like the bottom of my heart, When I say get paid, you want to leverage, it's the OPM, other people's money. You want to leverage that bank money to make more money. So with that, you have to solidify your business. Do the steps to make yourself official so you can have a Paydex score that will get you paid. So again, it's so many steps that goes to that, but your Paydex score is key, and being able to achieve the next level of financial literacy, which again, this is a whole entire conversation. For those who have not read Cash Flow Quadrant by Robert Kiyosaki, that's like Rich Dad Poor Dad 2.0. It's a whole nother level to that. And you'll understand when I say business and investing, it goes hand in hand. And this business credit profile development will help you get to that right side of the quadrant where you're a business owner and an investor. And you can do it quickly if you take the proper steps to do that. So again, your Paydex score will get you paid.
All right, thank you. Thank you so much. The Cash Flow Quadrant is definitely a great book. I learned a lot from that book too. Yeah, so I just want to say thank you again, Nancy. This was really great. This is a different level of financial literacy that we've done on our calls. So you might get some getting used to, and we'll probably will have you come back and maybe do another session if you don't mind, just to kind of like make everything make sense, put everything together. But also just want to say thanks for everyone that joined us today. We really appreciate it. It's always nice to have people here to listen to what we have to what we're sharing. So just say thank you. This video will be uploaded on our YouTube page sometimes during the week, usually around Wednesday and Thursday. So just watch out for it. And we encourage everyone to subscribe to our YouTube page. And you can also watch our old the past sessions that we've had. There's a lot of great sessions that we've done. They're all on the YouTube, for everybody to see. Share with your family and friends, so we can all learn together, start building wealth together, start leaving legacy for the next generation, and just great stuff. And we don't want the conversation to end here. So on Tuesday we have our Talk to Us Tuesday. Please join us. It'll just be a continuation of this session, just to have discuss it and see what people are doing, what steps people are taking, or if anybody has any further question, you can join us on Tuesday. It will be at 7 p.m. Eastern time. And also join us on our Discord app. It's a free app. We share a lot of knowledge on our Discord app every day. A lot of information are being shared there. So join the Discord app. And we're on social media on IG, Facebook, African Business Club 2020. And just connect with us, for networking and sharing of information. Also, I'd just like to say, as we continue to give back to the community with financial literacy, we're also looking for people to join us. In just if you don't mind, if you want to volunteer to be part of the volunteer group or the board members, or if you have a topic that you think you feel like everybody should learn about and you want to be a speaker, please reach out to us. You can send us an email at africanbusinessclub@gmail.com. Just let us know. Just reach out to me or Funshaw, any of the guys, and let us know what you'd like to bring to the table. This is open for everyone. So if you have any ideas, or if you want to run the social media page where you feel like you have some ideas to run the page or to reach out to more people, so please let us know. We are open to to suggestion and open to people joining us, and let's take it to the next level.
Was this to me or to everyone? I wasn't sure.
Just to everyone in general.
Okay. Wait a minute. Sorry.
Yeah, just everybody in general. If you want to give back and help, contribute. So I'm just giving the general announcement. And we have our book club. It's interesting you mentioned Rich Dad Poor Dad. We're actually reading not a Cash Flow Quadrant. We are currently reading Rich Dad Poor Dad. I think we are done based on the schedule. We should be announcing a date for our book club to meet to discuss the book. We'll send out information on that later during the week, sometimes next week. So if you're still reading the book, continue. But if you haven't, you can still pick it up. Rich Dad Poor Dad. It's a great book. A lot of knowledge in that book, and it's a game changer. So join us in reading that. With that said, I just want to say thanks again to everyone. And lastly, let's remember we are kings and queens. Nancy, you have a question?
Yeah, I just wanted to I do offer free consultations too. Like if you click on my social media or my website that I put on there, feel free to reach out to me. So I like to make myself open. And then I'm actually putting out a ebook specifically for business credit next week. So yeah, if you just want to just have a conversation, I do 15 minutes completely free because my whole goal is business literacy in order to build wealth. So feel free to ask me anything and connect with me at any point in time. That's like me from the bottom of my heart. I love connecting and just sharing as much information as possible.
Well, thank you. That's great. I think that's actually very needed and necessary. Like I said, I mean, personally, I think this is a topic where a lot of us are not exposed to. We might be exposed to financial literacy, but business literacy is a whole complete ball game. So I appreciate that you having that open to the members, and I would definitely be reaching out to and with some consultation. So if you guys want to reach out to Nancy, she's on Instagram. I know you share your page earlier. Do you mind maybe typing in the chat box or somewhere, or just post the slides again? So if people want, like,
Oh yeah, I can do that. Let me share my screen because I have different ways you can connect. So my direct email, I check my email daily. So feel free to email me. My website, you can join. I'm actually building a community by the end of, before the quarter is over for sure, where I just want to free information to people because again, this financial literacy and business literacy is a whole different thing. So join, like I subscribe to the newsletter on my website. That's going to be a way where I can bring you into the community. It's going to be free of charge and just keep people abreast on business skills because that's a whole nother ball game. My Instagram page, I try to have as much information just through my content that teaches and educates. And then I'm not that active on Twitter, but I got a Twitter page as well. So yeah, so again, I'm a comprehensive strategy to business success. So it's the Black model. I share things on business, I share things on leadership, I share things on asset acquisition, as well as business credit. So that will help you have a sustainable business. So those are the platforms where you can stay connected.